Hey, good morning. Let's go over today's trade plan. So in the overnight session, we had resistance at 67 to 68 and short-term support at 63 to 65, and the market just ended up balancing within that range overnight. At this point, the market is at another inflection point. We have a key high volume node at 2067, and how the market reacts at that area will tell us which side is being more dominant and in control. So heading into the open, we still have resistance at 66 to 68, and if the market continues to hold below that area, or we start seeing continuous rejection, then that could lead quite easily to a retest of the 58 to 60 support. And as we head down, if we do fail here and we head down to 58.60, we'll still have to be cautious on the long side as well down there, because at that point you would be breaking below the overnight balance, and if the internals are getting pretty weak and the momentum is pretty strong to the downside, then 58 to 60 may not hold. Now, at the moment, the volume is running extremely light, and that's something we'll have to keep an eye on, because if volume continues to be very light, then it would really limit the range potential on the day. So that means that going down to 58 to 60 could actually be the end of that short-term move if the volume remains very light. But if the downside move happens on high volume and high momentum, then we'll need to be a bit more careful at 58 to 60, because then it could be the start of a bigger rejection. We still have a open gap at this point at 50.75, and if volume really picks up and we're seeing some strong signs of downward momentum and strong failure off that big high volume node at 2067, then we could be heading down, all the way down to the gap fill at 50.75, or retesting yesterday's low 52.5. So that's something we'll have to gauge in real time. But bigger picture, we can see the market is trading within a pretty wide range here, basically around the 48 up towards 74, 75. And on the upside, if we get a breakout above 66, 68, we still have active resistance at 71.5 to 73.5, all-time high at 75.25. And given that we have the non-farm payroll, the employment report due on Friday, and no real major catalysts on the day time frame today. We have the ISM non-manufacturing index at 9 a.m. Central Time, but aside from that, no big catalyst. If we head up towards the 71.5, 73.5, that area can still be a spot where sellers are active first test. There's also a decent negative divergence between the S&P and the Russell. Now, that's been the case throughout this entire up move, but it does show you that there is a little bit of relative weakness here. And at the same time, last week when we were making new highs, NASDAQ was leading to the upside. Now we're seeing a change in that relationship, and NQ is lagging as well. So there are some warning signs here for buyers, and the risk at these higher prices is more on the buy side, given that there's no major catalyst for a big upside balance breakout, and we have the jobless claims number tomorrow and non-farm on Friday. So given that context, given that environment that we're in, the risk up here seems to be more on the buyers rather than the sellers, and for that reason, we do have to be careful initiating any new longs up at these prices. Now, if we see some upside momentum, an upside breakout on a strong tick, strong internals, then it can still be taken as a quick long setup targeting a move up to 71.5, 73.5, but we do have to have good location, we have to have good timing in order to do that, and it really does have to be a momentum-based trade as opposed to a location-based trade, because location's not really ideal up here for longs. And if we start seeing some rejection and the other markets also start pulling back, then there could still be a decent short setup off of this 66 to 68. As long as the market's holding below yesterday's high, the sell side can still step in. So that's something we'll have to gauge off the open, because the overnight session is very balanced, and we're balancing in the upper edge of yesterday's range. So, if we do get a breakout above 67, then that could lead to a test of, initial resistance and potentially the all-time high. So, this 67, 68, this pre-market resistance is really going to help us determine whether the buyers are still in control and being dominant, or, are we just kind of stuck in a bigger balance, in which case we can fail at pre-market resistance or even fail at initial resistance and then get a pullback on the downside. A break below overnight low would confirm the selling pressure. 58.60 is an okay spot if the volume is really light, but if it's happening on high volume, high momentum, then be careful at 58.60 as far as the long side goes. And then a break and hold below 58 to 60 would bring the 54.5, 52.5, and potentially the gap at 50.75 into play. And this is an area that buyers can still defend. It would be the bottom of the recent range and the recent balance. And just like there's no big catalyst for a big upside breakout, there's also no big catalyst for a downside liquidation either. So in the event that we do get all the way down to 49.51, and that would only happen if the volume really picked up, then that would be a spot where the downside could shut off, buyers could step in, and then we could get a move back up towards potentially 55 area or 58 to 60 yet again. But that 49.51 being bottom of the recent range can still attract buyers, and at that point, the risk would be more on the sell side if we got down there. So right now, heading into the open, very neutral bias, very cautious on the upside, but that does not mean that we can't go higher. I'm just saying that we're at an inflection point, and at this point, either the buyers press or we get a pullback. So how we react to 67, 68 is really going to determine where this market is headed. So let's keep that idea in mind. On the econ front, again, ISM non-manufacturing at 9 a.m. Central. So let's see how well the buy side holds it up here. Let's see how we react at that high volume node at 67, and we'll take it from there.